during COVID-19, it has led to extreme stability in markets as it disrupted the global business trends and reshaped many industries. This disruption has also affected banking sector across various geographies and is consequently will remain felt in the future as recovery takes place gradually. The post-COVID world will offer opportunities for cross-border merger and acquisition as various financial institutions will face challenges to remain operational while others strive to become larger and more diversified to withstand regional and global competition. A cross-border consolidation can also create a lot of synergies, allowing for cross-selling in different markets, cost-saving, transfer of knowledge, technologies, and talent. I would say also higher compliance costs associated with increased requirement, also adding to the cost of banks, compounding pressure on small and medium-sized leading to consolidation. It is estimated that more than 20 Gulf financial institutions with total assets exceeding $1 trillion were in merger talks in 2020. Banks in Saudi Arabia, UAE, and Qatar are merging to create largest financial institutions to support the transformation efforts that are underway in their relevant economies. To that point, Kuwaiti banks need to be well prepared and positioned to leverage any emerging opportunities and remain competitive on regional fronts as we see more and more large banks emerging, including recent M&A trends in the GCC countries like Saudi Arabia and Emirates. ESG trends have been significantly growing in importance, especially during COVID times, as companies' embracement of ESG will lead to a faster and more sustainable recovery. The importance of ESG disclosure and transparency helps mainly in building public trust and helps all stakeholders making better decisions. We are seeing the growing importance of ESG practices and reporting in the form of three main development trends. Number one, growing demand for sustainable investment globally, with more investors focusing on ESG. Additionally, premium valuation and pricing are being paid for companies with strong ESG program and satisfactory reporting. For example, in all our recent bond issuance, our discussion with investors reflected their increased focus on ESG practices and disclosure, and almost every meeting, our ESG strategy was a key topic. For example, in 2020, ESG funds captured $51 billion in net money for investors compared to 21 billion the year before. And also, more than 30 trillion of sustainable assets are professionally managed globally. And I would say also, more recently, we have seen various initiatives and proposals by likes of the ESFS, the European System of Financial Supervision, and the IFRS Foundation, the International Financial Reporting Standard, all aiming to improve ESG transparency through standardized set of sustainable reporting standards. Very soon, all rating agencies will include ESG reporting and scoring into their rating criteria, creating framework where ESG practices can be direct impact on credit rating. As a relatively underdeveloped concept in emerging markets, I would say that the importance of ESG practices and disclosure should be collaborated effort between industry leaders with regulators and government agencies to support and promote ESG practices and disclosures. Especially in Kuwait, we have seen significant development taking place, as His Excellency the Governor just mentioned, in the CBK efforts in developing the framework in the banking sector. The recent appointment of independent board members in banks is a great example of these ongoing developments. We have also seen some initiatives introduced by Bursa Kuwait to promote sustainability reporting by listing companies and potential plan to establish an ESG index to further stimulate ESG disclosure. Well, as much as we feel we are on the right track, there is more to be done to accelerate the trend through more countrywide effort to prepare Kuwaiti companies to upcoming challenges and the regulation and reporting standards that are focused on ESG that are taking place globally at a very fast pace.